All right. Well, thank you for joining us. Today, I'm going to be talking to you about gifting property to your children while alive versus gifting property to your children only on your death. Welcome to the Family Office Insider podcast, and my name is Jason Nagel. So, we often get questions from our clients about whether they should be gifting assets to their children while they're still alive, or should they wait until their death to do so. And so there's many different reasons why one might consider this. And so today we are going to go through those reasons. We're also going to talk about the tax implications and the creditor implications of gifting assets to your children. All right. So what are some of the reasons why a parent might consider this? Well, the very first reason and most obvious reason is that you get to watch your children benefit from that asset while you're alive. And so if you gift them cash or a rental property, for example, they could use that cash or the income from that rental property to enhance their own lifestyle. And as a parent, watching that may be valuable to you. So that's one reason. Another reason is for the educational benefit of it. And so you can imagine if you gift your child cash to buy market-based investments or to buy a rental property, or you gift them market-based investments or a rental property, you get the opportunity to educate your children on how to manage that asset. And that can be truly invaluable, especially if you're planning on leaving them a larger inheritance down the road once you do pass away. And so getting your other advisors involved to help educate your children, understand the tax implications, the income tax implications, looking at how to report the property in your tax return, being able to work with professional advisors and feeling comfortable with professional advisors. Those are all really important educational opportunities that you as a parent can afford your children by gifting them assets while you're still alive. So another reason why you might want to do that is it can reduce the size of your own personal estate. And obviously, if you gift a child a property now, that means it's not going to be in your estate. It's not going to continue to grow in your name, which means your ultimate tax liability will be less, and that'll end up accruing to your kids when they ultimately dispose of that property. And so those are the reasons why you might consider it. So now, what are some of the tax implications? Well, if you gift your child cash, there's going to be really no tax implications to doing that, especially if your child is over the age of 18. There should be no income attribution. And what I mean by that is that all the income and gains accrued from that, from whatever that your child invests into, will accrue to them versus you as the parent. However, if you do have to sell an asset to get that cash, well, then, yeah, you might trigger a tax liability when you do that. It is important to know, though, that if you add your child on title to a property or onto a bank account or to an investment portfolio, for example, you will be deemed to have disposed of part or all of that property or portfolio or a bank account. And that can be a really important consideration, because if you have a large accrued capital gain on that property, and for example, you take your name off and you put your child's name onto it, it is as though you sold that property to your child. So there's a deemed disposition. Tax would be triggered based upon the amount of your adjusted cost base of that property compared to the fair market value. And so that could be a significant tax liability that you would receive. So it's important to understand that before you start adding your child on title. Another thing to be very aware of is the creditor side of things. And so if you start gifting your child assets or you add them on title to your property, you effectively have disposed of that. And so that half title or whole title or the cash will be your child's asset. And so if they go through a creditor issue, such as maybe they get sued because they're making some bad decisions, perhaps they have a failed business, they have some security agreements in place with the banks based upon their own business interests, or they end up going through a divorce or a separation or whatever it might be with their spouse, those assets could be open to those creditors. And so that can be an important component of understanding whether this makes sense or not, right? And so there's many variables when you're gifting assets down to your children while alive, also on death. But I think it's important to, first of all, understand, what are you trying to achieve, right? Like, what's your ultimate objective with gifting these assets down? What's the best way to go about it? And then what are the implications of doing so? And working with your professional advisory team is going to be absolutely vital in understanding all these different implications and helping you to create a plan that's going to be the best plan suited for you based upon what you're trying to achieve and based upon what risks that you're willing to take or what tax implications you're willing to settle on. If this interests you and you want to have a bit more of a conversation with us, feel free to touch base with us. If you want to learn a little bit more about us to see if we might be a good fit for you, visit us at 360wealth.ca. Thank you, and you take care.